In this video, we will discuss the concept of a prop hedging EA. Stick around to the end to receive a free expert advisor from us at Prosperity Algo Solutions to be able to be used with your prop trading challenges. So in terms of prop hedging EAs, there's a few of these on the market. The most common called the Prop EA, and Titan X or the Blue Edge Forex team also makes their version of it. And the concept is to effectively simultaneously trade a prop firm account along with a live account at the same time. And effectively, you're taking the opposite trades in both accounts. And the concept here is that even if you lose the prop firm challenge, so you forfeited the fees, you would in theory recover the fees through hedging in your live account. And this is accomplished effectively through scaling the trade size in your live account so that if you have sufficient trades to have, to essentially blow the prop firm challenge, all of those trades, which would be winners in the live account, would add up to be the same amount which you paid for the prop firm challenge. So it's quite an interesting concept. So I wanted to both walk you through a spreadsheet which would demonstrate how this works, as well as maybe discuss some of the drawbacks which I have found using this strategy myself. So for the purposes of this example today, let's go with a very simple one-to-one risk-reward system. So there's essentially a slight edge over 50%, and if you lose, you make, let's say, $1, and if you lose, you lose $1, versus if you win, let's say you make $1. So equal risk-reward. And effectively here, if we look at this little diagram, let's say price is currently floating at this level. In your prop account, you would buy likely a larger amount because typically you'd be hedging with a much smaller live account than you would the value of your challenge account. This makes sense because here we're going to use an example of a $5,000 account. Your profit targets in the $5,000 account are going to be significantly larger than the amount of money you paid in order to buy the challenge. So here you would have paid $40. So your live accounts are going to be your trades in the live account are going to be rather small, versus the trades in the prop firm account are going to be larger to account for that larger prop firm target which you are shooting for. But this will all make a lot more sense once I dive into the spreadsheet. But effectively what we can see here is we would be taking exactly the same trade, except one of the trades is going long in the prop firm account, and one of the trades is going short in the live account. So in this case, this would have been a winner for the buy and a loser for the sell. So in your live account, you would have lost $5, but in your prop firm account, you would have made $80. So essentially, if you hit the target in the prop firm account, you would have incurred a string of losers in your live account. Whereas if you incur a loss in the prop firm account and you lose the challenge, you would have incurred a string of winners in your live account, which if done properly, should effectively pay for your prop firm challenge. So now let's dive into a spreadsheet here with this little prop firm calculator. So as you can see here, some of the inputs which we're looking at is we're dealing with a $5,000 account size, and this particular account cost $40. We're dealing with an 8% profit target, 12% max drawdown, and 5% daily drawdown. So here we can just quickly do some calculations. Let me just grab my keyboard. We can see that our profit target here is $400 with a max drawdown of $600 and a daily drawdown of $250. We can then also calculate, and what you could calculate is the amount of trades you want to be able to pass the challenge with. Here, I inputted 5 because that will have a direct input on the effective risk per trade. So here we can see that with the 5 trades, we would be trading around $80, or that would be our risk per trade. And then if we break that down here on the prop firm accounts, if you put it as a percentage of prop firm account size, that would be around 1.6%. And this shows as well that how many losers would we need in order to hit the max drawdown, which in this case would be 7.5. So you can round up to 8 trades. And this is simply because we assume that if we have if we open the eighth trade and it's a loser, we would automatically by default lose the challenge because the floating drawdown would hit you. But ideally, the winner or in the live account would still hit your take profit, and you would still be able to capitalize and make money with that trade. And the trade size live here would very simply be taking the prop account cost, so the amount that we paid for the prop firm, and dividing it by how many trades we would need to lose the prop firm challenge. So there's two different scenarios here. We have a scenario one, which is the pass the phase. This is one phase, this is a two-phase account example. We could also assume that this would also be a one-phase prop firm challenge, and the math would be relatively similar, or in this case, for the first phase, the math would be the same. You would just change the profit target. But essentially here, there's two different scenarios. In the pass the prop firm or pass this phase, you would assume that you are taking 5 winners in your prop firm account. And these are like 5 absolute winners. So this is, even if you took 15 trades, if the first 10 effectively netted out, because half of them were losers, half of them were winners, you would need 5 winning trades net to actually pass this. So then in the live account, you would have a net loss of $25, but in the prop firm account, you would have made $400, hence hitting your profit target. And then here we can calculate that the total cost of our challenge would be $65 because we have our initial $40 cost and we have the $25 of our cost of hedging. So here effectively, we can say that we would have a significant premium over the basic prop firm cost. However, because the risk reward and the potential of prop firms is so high, the whole concept behind this approach is even if you end up paying a percentage premium over the normal prop firm cost to hedge it, the reduction in risk more than makes up for that because you still only have to make a fairly negligible percentage gain on a $5,000 account, it's around 2% here, in order to actually less than 2%, in order to actually make that number back. So because of that, you have a fantastic risk reward opportunity. So let me also just show quickly here the second stage. And this would represent a two-phase account. And really the only bigger caveat here is if you're running a two-stage challenge. In the second stage, you would need to take into account the amount of losses which you incurred in the first phase of the prop firm challenge. So here we're saying is in the first phase here, we also lost the $25 in the live account. So if we were to try and actually recover that $25 that we lost in the live account for the first phase, we would need to scale our trade size in the second phase. So this is a bit complicated, so I won't go into too much detail here. But effectively what we're saying is the difference between a one phase, which is much easier, and a two phase is your live trade size needs to scale in the two-phase approach in order to actually recover your losses in the live account from the first phase. But let's stick with the one phase here to make it easy for now. And also we can see here in the second scenario of the first phase, had we failed as well, we would have actually recovered our cost here. We would have made $40, which would have recovered our initial cost. And maybe to wrap up this video quickly, what are really the drawbacks of this approach? Because from a purely mathematical standpoint, it seems to make a ton of sense, right? Because yes, instead of paying $40 for, let's say this is a hypothetical one phase, you'd be paying $65. But with less than a 2% gain on your account, you could recover that cost fairly easily. So why doesn't everybody just do this? And from personal experience, the drawback with this approach is it's very difficult to, or it can be challenging to perfectly copy across accounts, particularly if you're using more of a scalping strategy. It might not necessarily copy perfectly because price feeds are different or prices can move relatively quickly. In particular, if you are taking a ton of trades, some of those trades might not translate through from the prop account to the live account. And then if you're only copying 40% of your trades, all of a sudden you are going to be taking additional losses, either through blowing up prompt room challenges or on the live account. So in terms of some advice here, I would say this approach would likely work better if you're able to do more like larger profit targets, larger stop losses. And I would also try and combine it with an approach where you're not running it with a purely random coin flip system. Some of these EAs in particular, they're literally just going buy, sell, like randomly and hedging. I think that does expose you to more risk just because of the slippage aspects and the fact that your trades might not get filled where you want them to get filled. Therefore, I think if I were to do this again, I would likely use a larger take profit level and combine this with a strategy that actually has an edge, where you're using your hedging more as an insurance policy than using it as a way to, like, you don't want to have to use your insurance policy. So you're using it more as an insurance policy and you're not necessarily hoping to make money in your live account here. So I hope this all made sense. And yes, thank you for watching, and stick around for the following short clip where we will share a free expert advisor with you. Take care. Before you click away, if you're looking to get a real expert advisor, here at Prosperity Algo Solutions, we're currently offering our Golden Time Bomb system based on automating the London breakout and opening range breakout 100% for free. Watch the pinned video to find out more and to get access.